Happy Saturday, everyone. Here we're having a little mini summit on mobile money, and we're putting the emphasis on mini at the moment. We might have a few more people join us, and we're talking about passive uh, real estate investment opportunities. And I think Alden Guajardo here is probably the best person to talk about mobile mailbox money because you have a website and a plan for that. So maybe you can explain what you're doing with that.
Yeah, absolutely. So the strategy is real estate notes, right? Being the bank and happen to collaborate that explosive opportunity in notes with manufactured housing. So that's in the name mobile mailbox money. We originate notes on manufactured housing here in a top 10 market in the country, here in Arizona. So there's a lot of speculation, I think, across the country as far as the stability of residential pricing and things of that nature. Well, what better way to hedge the market additionally outside the stock market and outside residential real estate in personal property manufactured home notes? Why is that an opportunity for individuals here today? Well, with housing in a state of emergency right now across the country, especially in my local market, there's not all that many options for individuals that may be making $60,000 to $70,000 a year to secure housing, and it's been quote unquote called a state of emergency right now. So, as a licensed dealer of manufactured housing here in Arizona, we saw the opportunity in the market to start originating notes on manufactured housing. Well, what's great about that is you're fulfilling a big need, right, in a market that is highly that not all that many options out in the market. So you're fitting a big need, and the investor is earning a higher than average return on the acquisition of that note than a traditional real estate investment strategy. You know, the saying goes, why own when you could loan at a higher rate of return passive with mobile mailbox money? And that the truth is in the proof is in the pudding here on this asset class. We've originated about 100 notes on manufactured housing, personal property, and see a wide door of opportunity available in our local market, but also other markets as well. So that being said, with the origination of the note comes some factors, right? So if we're doing this as a business and originating notes, we run the end user borrower through stringent criteria that they may fall just outside the strict banking guidelines to secure a third party finance. So we step in, right? We qualify that client. Get their ability to repay, go through Dodd-Frank compliance for that borrower. In layman's terms, that means the borrower has a 600 plus credit score, no past criminal convictions, no past evictions, and verifiable income. I bring that up because the quality of the note is based on the buyer's ability to repay, right? As well as the asset. The asset is in a top 10 market here in Arizona. We specifically focus on Arizona at this time because we love the market. I happen to live here, and there's a lot of growth here in the valley. But that being said, the investment grade of that note is elevated as we put the borrower through criteria to ultimately qualify for that note. Why is that great for an investor who's possibly sitting here looking today, looking for opportunities? Well, that provides a secure strategy. You now have an individual who qualified for a note, and opposed to taking on an asset like that and renting it out to a tenant, you're no longer having to worry about the calls for maintenance, calls for the toilet being clogged. You participate as the bank. Who doesn't want to be the bank at the end of the day and fulfill financial freedom by investing in a note and receiving higher cash on cash returns than traditional real estate investment strategies? The note's already qualified, consummated, cash flowing in a top 10 market, and provides you that additional diversification that we're seeing heavily needed right now out in the market. I think that there's a lot of money sitting on the sidelines right now in speculation, as well as from the bloodshed in the stock market that we saw the other week. And then obviously it being a election year, there's a lot of people, I think, looking for avenues right now to make a savvy financial investment and ultimately project a return on that program. Notes fit that category. There's a lot of different buckets a capital investor can ultimately diversify in throughout this market, but it's pretty scarce right now for opportunities to ultimately get a projected return on investment, like we look at with Silvercrest Opportunity Fund that we started this year. It's a 506(c)(1) on acquiring mobile home parks for the long-term cash flow that those provide. The challenge I'm finding is the institutional investment appetite into that asset class has created a largely highly competitive acquisition. Well, by the time we try to go out and raise money from a private investor to fulfill the acquisition of a mobile home park, we're having to raise money at like 6-7% because the mobile home parks, the institutions are paying such a high equity multiple at a 6%. I can't be competitive. Who can be competitive in an acquisition like that? So I think that this fulfills an already cash flowing program where you don't have to so much project a business plan across a 5-year delta. This is already cash flowing, consummated, qualified. These are my deals that I bought. I bought the house. We rehabbed the property. I sold it to Jenny May. I know Jenny May. We qualified Jenny May through third-party underwriting. Put everything in a bow for a capital investor to be able to acquire a cash flowing asset with a face rate of 14%. What was that? Oh, that's a face rate of 14% on an originated note that's fully Dodd-Frank compliant, third-party underwritten, as well as provides automatic fund transfer services. So you're receiving monthly or quarterly principal and interest checks when you either acquire a note whole or you take on a vested partner within that note. And we've talked about putting a note into a trust and selling partials. Big game changer. So that allows an investor to participate on a partial note acquisition on the same cash flowing asset at the same face rate, depending on the agreement. But those partials allow individuals to take on an acquisition with less capital need on the upfront of the acquisition. So that's a small thing that we're putting into play here, because we see, as we talk to investors, not everyone has that $60,000 to $150,000 to acquire a note in its entirety. We have, liquidation periods of, hey, I just sold a property, or I just sold a mutual fund, things of that nature, and I'm sitting on cash. Well, what happens in between those times? Okay, I got 20, 30, 40,000. I can't quite buy a note yet. That allows a capital investor to participate earlier, opposed to having to save for the full balance of that note. So what are the opportunities available here today for a capital investor? Well, you could buy a note that's qualified, cash flowing, and consummated. And those notes, the acquisition amounts are anywhere from, on average, $70,000 to $150,000. Obviously, the higher price notes are going to be a larger manufactured home, 4-bedroom, possibly in a family style community. So you could acquire a whole note and be afforded the blessing of a face rate of 14%, which is hard to find in a cash flowing note that's set up with a bow. So that's one opportunity for an investor here today that may be wanting to take some escalated risk. It's still mitigated, right? But they own that note in its entirety in their portfolio. That allows them to either look for capital partners and hypothecate that note. So you bought a note, you have a has $1 million and they're satisfied with an 8% return, you could hypothecate that note after acquiring. Say, hey, my buddy Joe, you want an 8% return? This note pays 14. So I take Joe's money, we buy the note, and I make the delta between those rates. That's what we're seeing right now from the people that are taking that elevated risk of buying a note in its entirety. So that's one opportunity with a little possible burr situation on the back end. You could hypothecate that, get your money back, and still making monthly cash flow on the rate differentiation of what you borrowed at and what you acquired the note at. Big opportunity. Second opportunity here today on the Mailbox Money Show with Greg. Appreciate your time. Second opportunity here is also a hypothecation. So I originate that note as Win Mobile Homes. Same deal, right? Bought the house, rehabbed it, resold it. We're mitigating our risk on the front end, qualified the buyer, originated the note. And I look for a partner at like 8 and 10%, depending on, what the investor deems satisfactory at that time. And on that same note, that investor now has some even additionally mitigated risk because they have a vested partner within that note. So I originate the note. I look to Greg Dixon. Hey, Greg, you would like a more passive program. You're not so much familiar with manufactured housing. You love our program. What we'll do is we'll offer you say an 8% return on this cash flowing note, and I will make the delta of the additional 6%. We'll take on that note. I hypothecate it to the investor, and they make an 8% return. I make the delta, and they have a vested partner within that program just in case the note goes non-performing, right? These are notes. Some do go non-performing. We have a very low default rate, like 2% or less, since we've rolled out these additional qualification processes. But that being said, if a note goes non-performing on a hypothesis, we'll take the brunt of our arm of the licensed dealer with the attorney on retainer and go ahead and usher that to the ninth hole. What I mean by that is at no cost to the investor, we will ultimately retake that property, do the title work necessary in order to get it back into our name, and ultimately offer that home back out on the available market with our already marketed platform, Win Mobile Homes. So as these notes are being originated, Win Mobile Homes is operating as a licensed dealer, housing, reselling, buying properties, and things of that nature. I bring that up because you already have a sales staff that's working hard here in the Valley and getting traction on other sales. So say that note goes non-performing, you're a hypothecated capital investor with Alden Guajardo, Win Mobile Homes, and Mobile Mailbox Money. We take that property back at no cost to the investor, market it for sale with our sales platform, and hopefully recash flow that property as quickly as possible. Those are two opportunities. The third opportunity is a partials program. So you can participate in these notes at a smaller capital requirement in a partial. And actually, I'm not the best well-versed in partials, but this was brought to my attention, and how it's structured is we hold a note in a trust, right? So one note in a trust, it could be multiple notes. Let's just talk one for now, just for sake of the opportunity available. So one note, I originate a trust and I sell beneficiary interest in that trust where the investor, say, has $20,000, and I sell a 8-10% interest in the trust that holds that note, ultimately affording the investor a smaller acquisition, as well as they get the cash flow. They get to start participating earlier, opposed to having to save up for the average cost of a note around $60,000 to $150,000. So that was actually brought to my attention the other day. And if anyone's interested in opportunities to diversify right now, if you have money in a low interest savings account, it's time to make a play. If you have money sitting in a self-directed IRA, I've got a great IRA custodian, Nate Hare from Directed IRA, wealth of knowledge. That guy would love to connect you and ultimately get you earning. And if you're a real estate investor or a no investor, would love to talk and see how we can additionally help you diversify in one of the most explosive markets in this country. What is that? Manufactured housing. It's a state of emergency right now for affordable home ownership. I just had Jim Huddlemeyer on our podcast, and it's a dramatically different market than it was in 2008. Right now, we have an affordability problem. It's not so much people struggling to pay their bills right now out in the market, and that complements manufactured housing. Personal property mobile homes fulfill that need of affordable home ownership, when right now an average purchase price of a single family property is $450,000. Well, average incomes here in Arizona haven't kept up, and there do not allow developers to develop mobile home parks here in the valley. They're all on a grandfather clause. So these parks are going to be here for another 100 years with no competition coming out. It's a real deal, fitting the need, as well as provides that additional diversification in a time when it's needed most right now. Investors are possibly sitting on the sideline. So I encourage individuals that may fit that criteria with money in an IRA, they have money in a low interest savings account, or they had a liquidity event, would love to talk to each and every one of you about the mobile mailbox money platform and Silvercrest Opportunity Fund to secure those checks that create financial freedom and passive income. Greg, appreciate your time today. Light rant.
Well, that's absolutely perfect. You managed to provide almost the state of the union about the housing crisis and affordability. It's perfect. And also, you've offered three fabulous offers here. I'm just going to summarize them. One is a mortgage note, and you said somewhere around 14%, and that's that's an active kind of investment. And then you have the next one here is with your Silvercrest Opportunity Fund, which is more passive because you're really investing with you and you're doing the work, right?
Yeah, so just to state, Silvercrest Opportunity Fund is an accredited investment fund. It's a 506(3)(c)(1), silvercrestopportunityfund.com. That allows investors to participate almost on a hypothecation, quote unquote, but they are an equity owner in the pool of notes that we take down. So the first opportunity is an investor, maybe more savvy, obviously can acquire a note in its entirety. Silvercrest, additionally, second opportunity, we could offer a pool of notes to investors that want to participate in the generational wealth of holding those notes. And then the partials, partials are big.
Yeah.
Larry, forget his
Larry
last
Hoffman.
name, Larry. Yeah.
Larry Hoffman was here a couple of weeks ago. And nobody explains it better than Larry does. He's a master.
He's the partials king, so they say.
Yeah. Well, both you and Larry have a gift for simplifying very complex things and presenting it well. Both, so it's just fabulous. So you mentioned my name in there, and probably I would probably be a Silvercrest investment fund person at some point.
Sure. Yeah, listen, this business is not going anywhere. With the high material and labor costs we're seeing, those aren't going to be reduced anytime soon. There'd have to be some major event for that stuff to fall off. Well, that doesn't provide people the housing that they need in this country. Yeah. And I'm excited to see what it evolves into over here in the next couple of years, as well as how we additionally go after different markets. Was talking to Ivan Terrero about opportunities in like the Florida market. Steven Johnson, talking to him about opportunities in the Florida market. People love the low cost housing model. Why? Because it's the last frontier of housing. Where else are people going to go? They're going to go to affordable housing. If the market crashes and people are losing their butts, have to short sale or whatever, mobile homes fit that need. Yeah. If properties are highly unaffordable in a market with high population density, where are they to go with rental rates at $2,000 to $2,200 a month? that's a challenge. And I think the institutions are seeing that. They see the future half the time. But they're buying these mobile home parks, the whole parks, at high equity multiples. For us, it doesn't make sense to go after stuff like that. But that shows where the institution's mindset. They're trying to hedge their bets with affordable housing and mobile homes, and I'm following in those coattails.
Yeah, no, it's fabulous. No, it really is a solution to a problem that's all across North America, really, affordability and housing shortages. And, governments everywhere are trying to incentivize building, but it's really, and you're right with the people in your market who maybe can't qualify for a large mortgage to buy a full house, and you help them. Even some will have trouble even financing a mobile home, but you can help them.
For
Yeah,
sure. Yeah. And, there's not all that much financing options in manufactured housing, which is interesting. You would have thought that, like Joe Biden, when it came out at the time and issued some federal funding for mobile homes, if they elect housing as a state of emergency, what are the options out on the market to correct that problem? That's the option is manufactured housing and mobile homes that are already set. And with the lack of funding in this asset class, that you got like 21st Mortgage, who will originate notes on manufactured housing personal property. They're really the largest player when the other like 3 or 4 have such concrete guidelines. We fail to convert with them on a sale half the time. So it creates that opportunity of almost a monopoly opportunity to create a commercial availability of this financing. And what does that mean? That means velocity in a market where it's hard to even do deals in general. Well, you're telling me that we can do 3 to 5 deals a month
yeah,
right now in this market? Where can you find that? Maybe a note investor, has deal flow, but they're having to go negotiate with the seller of the note and get a discount and blah, blah, blah. Or they're a single family flipper.
yeah,
You can only do a few of those at a time. This provides real deal flow for individuals that may be liquid for like 1 million or 2 million. You can get 5 to 10 notes and diversify across 10 different properties in a top 10 market, when historically you would have burned $1 million, on 2 properties, possibly, depending on what market, 2, 3, 4. But you can now double your diversification
yeah, for
play and
sure.
hedge your bets,
Yeah,
as well as make a higher face rate on the
yeah,
note because it's more affordable. That just seems like a golden nugget to me.
no, for sure. And if you've got 10 notes, yeah, that's diversified your risk too. So rather than one big note that, if that
For
goes
sure.
south, and they do.
100%. Yeah, notes go non-performing. That they
Yeah,
do here and there. That's the risk within the strategy. But obviously, on the front end, we're trying to mitigate that
yeah,
uh, at any cost, really. And what that means is qualifying the borrower. As long as we have a qualified borrower and the payment of that note fits market rent, or lower or beats rent
yeah,
in some cases, where else can that end user borrower go for a cheaper fee? They'd have to move out of state. So that creates a real program that's strong, and the borrower is highly incentivized, obviously, to stay within that program. And with a low default rate of like 2% or less, that's a great hedge additionally.
yeah. You mentioned there at the top here that many people are sitting on, they're being cautious because of the stock market and the
For sure.
election and various the economy, bit depending on who you talk to, it's going in one direction or the other.
For
So
sure.
they're sitting on some money, and it sounds like this, the notes in general and what you're doing is really a pretty safe place to go. And
Yeah, and even on that note, I talk to a lot of people that don't want to take on the long-term note, 10, 20-year draft date. We have now initiated out of the appetite for the investor. They're wanting, like a year to 2 year turnaround, ultimately to have the availability of a liquidity event. We're in talks right now to help solidify programs for individuals that want short-term notes, whether that be a quote unquote like construction loan on the homes that we've already bought. We need transactional funding in order to rehab the property. So we draft a 1-year construction loan that's a face rate of 10%. And they get a lien on the property 1 year. Hopefully we're in and out before the year. And by that time, we tap the investor once we find a qualified borrower or a cash buyer. Say, hey, Greg, thanks for the transactional funding. You earned a face rate of 10% annualized. Would you like to get a first right of refusal on the note that's coming available? Or would you like to put that into another transactional program, which is a construction loan? That we're seeing that too, because people are, like you said, weary of the market. They don't want to so much take a timeline of 5 years right now with the speculation that's going on in the market. People are watching interest rates. So I think that if that may fit for somebody, looking for a more short-term program, I've got wide door of opportunity and availability in that.
And the notes, there are always people looking to buy notes. The joke with Larry Hoffman is, how many notes have you bought this week, right? And then what he presented with the partials, so the example he gave was, let's say your daughter needs to go to college, you can sell a partial to get the money out to send your daughter to college, right?
Yeah, no, that in itself, the ability to acquire a note, and now you yourself, the investor that bought that note, you can almost burr that note. You bought it, it was consummated, and you not refinanced, but you found a buyer for a partial in the note. You got some cash back. You still got your asset that's cash flowing, or you hypothecate it. You, as a savvy investor, bought that note, and you have a investment client list, or you do an education program. Now you have 10 people that want to buy that note, but they want a vested partner. Those are real opportunities to raise private capital yourself, the investor watching here today, and go after consummated qualified cash flowing notes and have a deal flow. Know you have deal flow. You could be doing regular education events, raising money to buy these notes. The opportunities are really endless.
Yeah. That's
especially with the deal flow that we have.
With the deal flow. No, I really like what you're doing there in Arizona, and many others are doing similar things, but you guys really have it. You're firing on all cylinders.
That's for sure. Definitely firing on all cylinders. I was mentioning to you, Greg, before, I work entirely too much. I don't really have any semblance of a personal life, but I love this business. It's so emotionally satisfying. It's such a big need in this market, creating homeowners and earning a smashing return in a market that's highly volatile and speculation going on. I love this business, love everything about it.
That's fabulous. So so contact Alden there at mobilemailboxmoney.com. He's all over. You're everywhere, actually. You're on. Every time I see there's something popping up on LinkedIn or YouTube or something.
That top of mind awareness has paid in spades, and as well as being at some conferences throughout the country, like Diversified Mortgage Expo is a big deal. We'll be at the Alternative Investment Summit here in Scottsdale at the Orange Tree Golf Course for the Directed IRA Alternative Investment Summit. So we'll have a booth there as well. And I think we'll be out at the Note Expo too, Eddie Speed in Dallas. These are some of the top events, people. And Greg's been to a few. I've been to multiple. We're trying to get booths at every one because we'd love to meet you out at these events. People do business with people that they know, like, and trust. Well, what does that mean? That meeting in person and, figuring out, how people are wired, and in a professional setting, what better way to do that at one of these conferences. So
No, not,
if you want to come out, Greg, would love to see you at the Alt Summit here in Scottsdale. That may
yeah.
not work for you, but
Well, we'll maybe. I like Arizona. I've gone through there quite a few times, and yeah, and about this thing is, I don't know if we should mention he got stuck in the airport in Las Vegas, was it?
oh yeah, man, yeah.
Yeah, I think
The
you guys need to
travel's tough.
pool to get a private jet for this thing.
Hey, that,
Charter
one
one,
day we'd
one day.
love to include everyone that's watching here today on, the success of this business, and who knows, that may happen, in
Yeah.
20 years from now. I don't know.
Yeah, you've reminded me. I meant to put an article on the Note Center with all of these different events. Maybe I'll do that this
Yes,
weekend, because there's just some fabulous events, and as you say, it's a way to meet other people, and people who different people have different ideas. They're doing different things, and lots of collaborative deals, partnerships get formed. All sorts of things happen.
I would love to see that list. I'm sure you've heard of events that I haven't heard of,
Yeah,
or,
yeah, yeah,
whatever. I would
yeah,
love to see that.
yeah. Okay,
Maybe even
I'll
make
work.
it a collaborative, people start adding
Yeah,
events, and you have a national real estate conference
yeah,
list, either notes or real estate centric,
yeah.
definitely love that.
Yeah, no, I'll get on it. You reminded me that I said I'd do that a while ago, and I haven't. So there we go. That's awesome. Anyway, well, I guess we can. You caught that note from Ivan here. We
Yes, I
mentioned
did.
Dr. Ivan Terrero, and
Ivan does some of what we do in the Florida
yeah,
market. So shout out to Ivan Terrero, great guy.
yeah, and I think Stacy here. I think she's in Arkansas, and she's
Okay.
also involved with mobile home parks in some way too. There we
Great.
go.
Yeah, would love to connect. If anyone's interested in connecting, figuring out how to collaborate, you have private capital, you're looking for an acquisition, any of the above, call me. My phone's on. I work way too much. My number is 602-888-CASH. Call me direct. That rings to my line, or go to mobilemailboxmoney.com, and one of our liaisons will
Yeah.
probably message you within 30 seconds of being on that website.
Was that 888 cash?
602-888-CASH. So that brings direct to my line, and love the
Oh yeah.
Arkansas market. Would love to talk to Stacy, talk to Ivan about that market too. Love that.
Yeah. Okay. And Stacy said something. Oh, Diego. Okay. There we go. All the usual suspects are listening in today.
Love it. Listen, that just goes to show that there's a new community being created in this asset class in manufactured housing that wasn't the case before. We're seeing a new frontier of manufactured housing, when historically it was like trailer park trash, trailer park boys, had such a big negative connotation, where now it's such a need. And we're seeing people that are highly opportunistic going after one of the most explosive needs in this country.
Yeah.
Love it. Love it. And I've connected with multiple people through this channel
Yeah.
here, Greg,
Awesome.
through Ivan and all these people. So,
Yeah.
if you're watching here today and you want to get on Greg's show, you'll have to pay him 20,000 and he'll have you on the show. No, just kidding. But reach out to Greg. Greg's doing all kinds of different shows, different industries. You do a great job. You really do, Greg.
Okay. Thank you. Yeah, it's fun. I enjoy it, and I especially enjoy this Saturday because we've had some fabulous roundtable discussions with Dr. Ivan and Maurice Thomas, and many people with different ideas. And I think we did about a month on the affordable housing. Various opportunities for affordable housing, and
For
you fit
sure.
into that perfectly.
For sure. Yeah. I'm trying to think how I even saw the channel. I think Rodney Madison happened to be, I think, on a live, and Rodney is
Yeah,
one of my investors. just chimed in on the comments section. He's like, "Oh, we need to get him on here. That's awesome. Love it."
And we've even had Rodney on because he's been a little bit reluctant to get on because, but he's the guy. He's the sort of like the standard note investor, and he always asks really good questions. And
Yeah, no, he's got the blue book, whatever you want to call it, the due diligence blue book,
due diligence, yeah. the sober voice on the show.
For sure.
Yeah. Anyway, no, it's very, and it's a lot of fun. I really enjoy doing it. And
well, yeah, Greg, I appreciate you giving me the opportunity to display the things that we have available. I'm very hungry in this market, and I'm looking for people that are hungry as well.
Yeah. Okay. Awesome. So we'll see what we get up to next week.
Yeah, for sure. Thanks for having me here today, Greg. Thank you so much.
Thank you very much.
Absolutely.
And enjoy the rest of your Saturday.
You too.
Yeah.